Hello, Maverick traders, and welcome out to your daily market roundup. This is Sanket here, and I'll be breaking down today's market price action. It's a Thursday, November the 14th. Let's get into it. As always, we'll be breaking down today's market price action by looking at broader markets, take a look at the major indices, take a look at what the sector heat map analysis is telling us, and then we'll take a look at some possible setups ahead. Let's get into it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So jumping into the market analysis, let's just jump right into the numbers here. And what we are seeing here today is an extension to that sell-off that we're seeing in the markets here. So here we are, broader markets. You can see that Dow Jones were down, S&P down, Qs are down, and the small caps are down. So pretty much everything is down across the board. Now, if you look at the news for the day today, what's causing that pullback? So again, we had a massive rally after the election, but we are seeing this strong strength in the bond and the bond yields that are really causing or weighing down on the equities now. And something we talked about it in the previous classes as well. I think while we're getting this further extension, we had the Fed Chair Powell remarks earlier today, and that was certainly more hawkish. So we are seeing diminishing those bets for a rate cut in December. So again, I think that's just going to weigh down on the markets, and that's exactly what we're seeing here. Now, here's the chart here. You can see that this chart, this is still technically a bull pullback, but you can see that the big sort of a reaction of the election is slowly kind of fading away. So at this point, I think we have further downside risk before we get to this support area. And based on the support area, we'll see if we bounce off from here or do we continue going down from here. Now, the question is, do the yields back off or do the markets really start to take a hit here? Because those yields start going to weigh down, and now we're looking into the market, the year end, and we'll probably see a diminishing chances for the end of the year rally. I think the market's already at all-time highs, so maybe this is the high that we're going to see for the rest of the year. Here we are looking at the Qs, looking at a very similar thing. So we are clearly in this pullback formation here. Like I said, I think at this point, it's good to sort of position your portfolio with a little bit more bearish bets here, just in case if we continue to see that extension down further below that support area. So here's the heat map today. You can see that it's a lot more red than we have in the green. But let's take a look at the numbers. I mean, numbers are telling us that, again, 66% to the downside, 30% to the upside. But take a look at this plus minus 50 moving average. This number hasn't really gotten any better. So that's the one thing I was kind of waiting for after the election. Do we see that rally broadening a little bit? I'm not seeing that here. I think this is where there's a lot more risk, I think, in the markets. And I see less chances for the end of the year rally, especially if these numbers don't improve and we continue to see the markets go to sort of give back those gains we saw. I think that's where we see a little bit more of that mood will dampen for people expecting the end of the year rally. So I think the next couple of weeks will be interesting here. As far as the outlook goes, again, the overall outlook remains positive, but I think in the short term, you want to bring your outlook down to more neutral to maybe a -1 for the week. I think we're likely to retest that support area. So as far as the setup goes, again, I'm just going to take a look at a couple of shorts. I know we talk about a lot of longs, but I think this is where we're going to start hedging a portfolio with some shorts. The first one here comes up is AMD, and I just like the fact that we had a little jump over here. We almost give back all of the gains, and then we are now making new lows. So I think this thing can easily get down towards that 132 area as my target. This is the one that I like, especially in the next couple of weeks. Now, here's another one, taking a look at Lilly here, Eli Lilly. You can see that this thing also gapped lower, and now it's, we had a massive gain here and it's slowly going lower. We're definitely seeing a lot of weakness in the healthcare sector. We continue to see that. So we'll probably, see that continue to extend into the year end. So as far as the outlook goes, I think the strong yields are weighing down the equities. We can see that kind of price action. Even after the market closed, market are continuing to sell off here. So be cautious here. As far as the economic report goes, we have the U.S. retail sales tomorrow, but that's pretty much it. Earning-wise, the Baba is on the docket here, but not a whole lot. So I think in the next 24 hours, we'll see how the retail sales number comes out. But I expect markets to sort of pull back a little bit, give back some of the more of those gains that we've seen in the last week or two, getting down towards the support area. That's the plan here. Thanks for joining. We'll see you next one. Happy trading.